Simple knows, because they immediately when, for example, today we will go to the dinner with Bikesh, Simple already will mark this transaction like dinner, KL, travel, also will ask me this amount of transaction, very huge only for yourself, maybe you are with your friends, and I will answer yes, and after that you will mark that I was with friends, and after that I can ask Simple, like I'm asking Google, how many times or how much money I'm spending for dinners with friends across the world or across Asia, or how many times or how much money I'm spending to buy salmon, etc. And this very big difference between how banks estimate their customers and how they live in vertical-oriented world, and how Simple Bank exists in horizontal world, and understand that there is no, this world isn't structured. It is unstructured data, and here you have to mark each transaction for different parts of ecosystem. And what else? When I store, for example, data about results when I visited hospital, I save this data because it's very convenient. After that, I can also find these PDFs very easy. We are asking the question for Simple, but Simple will know much more than transactions about me. After that, they will suggest me, we just analyzed your data, which you provided for us, and we know that you can pay for insurance less than you are paying for today. It will be a bigger value for me than I expected before. They always suggest me to share with them more and more data for my convenience for today, but after that they analyze this data and upsell, cross-sell information better. Also, we invested in Rocket Bank. It is Russian version of Simple, not a Russian version of Simple, but still these guys inspired by Simple Bank and launched the same company, and we sold about half a year ago this company for biggest private bank in Russia. And what's interesting, you can use my phone and to ask online support of this bank to tell you, for example, joke. Only to tell you the last joke. If you will be not happy, can you tell me new joke? That's all. It's not about what do you want to buy from us, or what's happened, or what do you wait from our bank. They're happy when you are talking with your bank. Whole banks try not to talk with you because it's bullshit. Do you know somebody, company named Zapas.com? Zapas.com, it is, I think, the best, or the biggest, or maybe one of 2, 3 biggest players. It is online shoe retailer from United States. And do you know that they have bonuses for their customer support for the longest conversations with their customers? Why they are spending, and their record, it is 4.5 hours conversation with their customer. And why, or for example, they provided bonus for guy which asked, he heard from his customers that he just came to Las Vegas, and also after purchasing shoes from Zapas.com, he wanted to go to the dinner, but he did not know how to buy, where to buy pizza, because he just came to Las Vegas first time. And immediately, guy from customer support thought, oh, I will try to find by myself to help you how to find the best way to eat pizza. But why they're doing it? Because the same reasons as Simple Bank trying to do. The more information you are sharing with your company, the more loyal you became, the more data this company can analyze, and after that to serve you better than before. For example, when this guy from Zappos.com hearing voice of your baby, he or she immediately mark in their CRM system, this customer have baby, please next time ask him or her about how, what's new about this baby, or heard some noise from dogs or cats, ask name of these pets, and next time ask what's new, how do they feel these pets. Why I remembered about Zappos.com, because when Josh Rake originated Simple Bank, he was inspired by customer support idea by Tony Shea, CEO of Zappos.com, and he came to him and asked him, can you educate me how not to think about dividends for shareholders, but how to think about customers 24/7 and to serve them better. We invested also in Moving by Brenkin. I think that you know this guy. He's author of such bestsellers like Bank 3.0 and Augmented. Most of journalists thinking that this is the same solution, but it's not the same. What is the beauty of neobanks? Several neobanks targeted for several target audiences. For example, Monese in the UK, they're focusing only on expats. Because when you came to a new country, when somebody coming to London, or I came to Singapore, for first months, it's very hard to become customer of local banks, because they do not know you, they do not trust you, you do not still have enough documents to open your account, etc., etc. But it's not so big in terms of numbers of people, but amount of people, but it is very big in terms of capacity. I mean, money inside this vertical, how to serve expats in different markets better. Regarding moving targeting for ladies mostly. Not for ladies, they're targeting for young customer between 21 and 30, but their best example, it is 25, 26 years old lady from New York, and she's spending so much as she can, and she tried to spend less and to earn more, and what kind of value Moving provide for her. Each time, if in comparison with Simple trying to work with mature long-term players, Simple asks you about not about your short-term goals, mostly about your mid-term goals, long-term goals, about your education, your current kids, future kids, your wife, your future wife, etc. And Moving asks you every day, every hour about what are you doing. For example, you are just came to Macy's or saw some new beautiful red dress in the window of Macy's department store, and you immediately want to buy it, but Moving Bank asks you, please take a photo. You take a photo of this dress. After that, Moving Bank started to analyze through open API of Google to search the same dress between how many pictures of the same dresses across Google, which analyzed from other e-commerce sites, found the same dress, analyzed price for this dress via different e-commerce players, asked you what is the price in Macy's, and compare this price with price for this dress across other e-commerce platforms, and immediately advise you, you can spend less because you can buy cheaper online than offline. And second one, please buy this dress, but not today, please buy it tomorrow. And if you are familiar with different exercises, different analysis of customer behavior, if you will always give you opportunity to buy something not today but tomorrow, you will decrease twice your purchases. The same with coffee. If you will ask yourself, please wait 30 minutes to buy or not to buy this coffee, you will, in 50% of cases, you'll forget about this coffee and you will spend for coffee 2 times less. And this is the value of moving. Moving exists also in terms of business model. Moving is simple. They do not have their own banking license. Simple Bank previously hosted on Bancorp, as I mentioned in my first introduction part. Moving Bank, they thought to be hosted on Bancorp platform, but now they're hosted on some small bank from Texas. And they exist by themselves, I mean, it's Moving Bank. But it's not bank. It is front-end solution for customers based on some BaaS platform which provided by third-party providers. And they launched 1 year ago in Canada in SJV with TD Bank. TD Bank, it is a very big bank in Canada and US. And in Canada, they became #1 downloaded financial app in App Store after 1 year, only after 1 year of existence, and in top 10 of downloaded apps for youth, for young generation. It's extremely great results. Also, they just launched in Australia, and they are open to go to any other countries. Feeder Bank, maybe you read 2 weeks or 3 weeks ago that we just launched this bank from Germany to BPCE. It is second largest banking group in France. What is the value of Feeder Bank? It's always not the same like Simple Bank. What is the magic of this vertical? That whole new player provide new kind of value for customers, and they are trying to focus on new targeted audience. Feeder Bank, it is community bank. Community, I mean online community. They started not as bank, not as fintech solution. They started as online community to discuss about pluses and minuses of different banks in Germany. And they started only via providing the value to discuss, to talk with different experts. And you as a customer also can become expert. You can be registered not as reader, you can be registered by yourself as experts for several products on your market, and you can give advices what is the best solution on the market for insurance, for loans, for deposits, for cards. And it is the reason why customer acquisition for Feeder, it's only 50 euros. Because how customers, they came to Feeder not as for a bank, they came to Feeder as a platform to discuss about different products. And how it look like. They have about 320 registered users in community to discuss. 50% of them converted to Feeder wallet. This e-wallet, which you can link with current account in your bank, with your cards in other bank, with your PayPal e-wallet, etc. And 50% of them converted to hard products, I mean deposits and loans which are originated by feeder bank. And this is the reason why customer acquisition for feeder so cheap, because it is not commercial-based conversation, relationships with your bank. It is trusted relationships because you are independent advisor at the beginning, and only after that you are also providing opportunity to buy products by feeder, or feeder they have open architecture. They integrate it with other banks, other e-wallets, other fintech services. If you do not want to buy something originated by feeder, you can buy through feeder profile third-party solution, because we do not push you to buy only everything powered by feeder. We just the best interface to interact with financial sphere. This is one more example how mobile banks, online banks can attract and to serve customers better than traditional banks before. Is it possible to you to ask your bank about products of other banks? No. They will not never care about to support you to buy or to tell something against their own products in comparison with other products. But feeder always honest with you. This is pluses and minuses of our competitors. This is pluses and minuses of our own solution. You can buy theirs products and our products through our interface. We are just the best interface to you to interact with them. Also, one more feature. How many hundreds of thousands of dollars each bank's spending to create scripts for customer support or for marketing department to create description of each new product. But when feeder originate one more product to the market, they ask their own customers who want to create this description for YouTube as video, as text for our marketing department to create commercial leaflets, etc. And several customers, oh, I can, because I'm so inspired by, I know how it's working. And they pay for this customers. It's always cheaper than to have your own in-house marketing production, video production, etc. Because customers always better than you are. They know better about pluses and minuses of your solution, and they are more honest. They can talk. People which will see their own feedbacks will trust better than for their own description than for your own description. Tandem Bank became second licensed new bank in the UK. This bank launched by Ricky Knox. Ricky Knox, ex-CPO, Chief Product Officer of Azimo, one of the biggest online remittance company from the UK. And their solution very close to solution with Simple Bank, but with some kind of differences. They, since the beginning, focusing to provide also mortgages, because whole fintech, they are not so happy to work with heavy products like mortgages, and they, since the beginning, try to differentiate themselves with online mortgage products. And regarding third licensed new bank in the UK, Monzo, or previously Mondo, they are focusing to create some fancy product for young customers. And what's interesting regarding Monzo and Tandem, when they launched, even they had only sketches of future mobile app, when they have only text description what they want to do, they came to the market, to their future customers, and asked them, if you really want this product, if you believe in value of our company, you can invest to us. And they attracted for, as I remember, 26 seconds after starting of each campaign, £1 million each from their customers. And £1 million from customers, it is 10 times or 100 times more than 1 million from institutional investors. Because it's so hard to involve your customers as LPs, as shareholders of your company, rather than professional investors. But if these guys will vote that you have to exist, you have to serve, you have to create something for them and their friends, and they not wait with discount for future usage of your company, but they invest into your company, they share risk of your existence with themselves. It's so unique. And I think it's great opportunity for all of us. For example, if you want to attract 200,000 investment round, please go to some crowdfunding, crowd investing platform and attract 20 from your future customers. But these 20 will be bigger than 200 from VCs. Regarding number 26, number 26 is also a feeder German-based company. Their vision to the market not to be leader on each market. They play in scaling. At the beginning, they integrated with Wirecard. It is also BaaS platform to launch your fintech product faster, cheap, and easier than with any traditional bank. And they started, as I remember clearly, with 3 countries. After that, we had 2 more, 3 more. They are playing with scaling, how to expand. And their last round also came from Likashi. As I mentioned at the beginning of this part, Asian investors, several Asian investors, estimate great demand from neobanks. And really, if you are using, still using several products of my portfolio companies which I exited, and for example, several Singaporean banks, but you cannot compare them in terms of customer service. For example, if I need some documents from my bank to the UK embassy, I can ask via internal chat inside my banking app from Rocket Bank, please send me to my email statement from my current account in PDF, in Russian, in English, in any other language, and they will send it for me in 5 minutes. I asked my Singaporean bank, every first day of new month, we will send you our e-statement to your email. If you are not happy with it, please go to our branch, sign request to have it faster, blah, 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 nightmare. And I do not know why, but many customers across Asia, they're still happy with their own banks. Maybe they do not know that it can be better. But you can know because you are familiar with how many new services exist on the other markets. Even, I think it will be a great test today, tonight, to came back from this event and to ask via online support or offline support of your bank to tell you some funny story from your bank. without any negotiations regarding financial products and to send me their answers. It will be, I think, great analysis of real friendship-based relationship, because all banks prefer to position themselves through their commercials that we love our customers, we try to understand them better, blah, 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 but really ask them about how good these friends. Regarding e-wallets, it is big difference. Sometimes journalists try to unite these two verticals, e-wallets and neobanks, but it is two different use cases. E-wallets, they do not try to replace your bank. E-wallets, it is like a middleman or middleware between you and many financial providers. They provide the opportunity to aggregate. It's mostly about aggregation, how to visualize your financial data, aggregate and visualize your financial data better than your bank, because they understand that you cannot be a customer only of one bank for today. You will use one account from one bank, mortgage from other bank, some payday loan from microfinancial institution, also insurance from other insurance company, but how to aggregate it in one front-end solution, one interface. And what's happening with e-wallets today? Most of them, in terms of product comparison, they are not so sophisticated with neobanks. For sure, solution from Simple Bank, better than Apple Pay, Moving Bank, better than Alipay, Tandem Bank, better than something else. Their value it is execution and distribution. How to attract more and more and more millions of customers to their platform. But I think that next step of this e-wallet will belong to buy these neobank products and to distribute these products for their customer base. PayPal already started this process of acquisition. They already bought Venmo for online remittances, and Venmo growing extremely high under their management. Also, if you will check last financial report by PayPal right now, most of their profit belongs to PayPal Credit. They analyzed transactional data from their merchants, and after that provide them already pre-approved credit lines to use. In terms of rates, it is very expensive product, but their customers use it because it's pre-approved. You do not need to go to any other financial player to provide some documents, etc., etc. It's very convenient. It's about service, and customers can pay for your service, for your understanding, and they are extremely successful with PayPal Credit. They just started 3 months ago in the UK to test PayPal Credit for retail clients, also based on your previous behavior, how often did you use PayPal wallet to buy something. I think that this solution also will be extremely successful, and it is a great example how company which started from one product, I mean e-wallet for online purchases, and after that to remittances with Venmo, to high margin products like credits, like loans. And one more interesting feature or idea from this company, in 2013, they decided not to create whole new products by themselves. They decided for themselves that whole other part of the world will be smarter than you are. because the world growing so fast, so many new talents came to the market in different countries. You wouldn't hire everybody in this world. And how to work with them, how not to compete with them, how to create synergy effect between you and these new players. And they started to invest more and more of their resources into open APIs. Right now, if you will check their last financial report, this is 2013, when they decided to shift their strategy from how to create whole product by themselves rather than how to work with third-party providers. This is the expenses for labor. And this is their profit. Because after that decision, you do not need to hire more and more engineers, product guys. You just need to be focused on your platform. You already own millions of clients. You already attracted them. After that, how to provide them more and more solution, but you can provide it through open API integration. And it's a great opportunity for somebody who are creating something new today. Regarding Apple Pay, if you will compare PayPal solution with Simple Pen or even with PayPal, it will be very extremely easy solution. I mean, it's like basic solution for primary school. But this is the value of Apple. They own infrastructure, they own customer base. But after that, they want to add more and more services based on their platform. But minus of this architecture that Apple own proprietary system. You will never be their partner. You will always work not with them, but for them. And it is very big question for the future solution of Apple Pay. How many independent standalone companies will decide to work for them? And vice versa, it is value of Android Pay and Google Wallet. They own open architecture solution, and most of customers, especially across Asia, because most of smartphones across Asia based on Android, and if you will check speed of growth of customer base of Apple, and speed of growth of Android-based smartphones, it's higher. And what they are doing both right now, they are playing only in the game of scaling. Apple already covered, as I remember clear, 11 markets. Google went together with Samsung Pay for 6 or 7 markets, as I remember clear. You can check with our Money of the Future report. Regarding Alipay, I think it's underestimated company because their valuation only 10 millions bigger than valuation of PayPal, but their customer base twice bigger. And their ability to add more and more financial products inside Alipay interface really better than capacity of PayPal for today. Maybe PayPal will be changed. But what is the problem of Alipay? It is problem of scaling. They spent many months to be launched in India. Finally, they decided to buy Paytm because it is so hard to be integrated, to be launched, to be hosted in each Asian country. They are looking for the same products like Alipay or Paytm across other Asian markets. They just launched by themselves with Wirecard in the UK. But it was not successful solution, very limited product, value proposition, and not so high growth. But vice versa, Chinese tourists, they travel a lot, they spend a lot, and this is the value of how Alipay can interact with merchants to use their infrastructure to accept payments, but vice versa, it's always a problem, especially with Asian-based fintechs. You can be #1 in your country, but how to scale to other countries? This lack of infrastructure, it is plus when you are trying to compete with domestic leader in your country, but it is 10 minuses for you when you will decide to go to other countries. It is the medal with two sides and dark side. It is a very dramatical side for everybody. With Samsung Pay, it is very interesting case. Samsung Pay, it is US-based company LoopPay. When LoopPay came to us, to our fund, and asked about 10 million investment from our side with $50 million valuation, we checked their product, significant, extremely well done. We understand that nobody can provide the same hardware fintech solution on the market today. The team, extremely talented. But after that, we analyzed their sales, and we told them, oh, you sell so few hardware solutions to the market, we think that you are overvaluated. And after 3 months, Samsung bought this company for 250. It means that in 3 months we can increase our 10 million for 15 million, 50. But we failed because we didn't estimate that sometimes with fintech, not so necessary to be to be successful with your sales. Sometimes your future belongs to understanding that some guys with big customer base we can buy your company to add your products for their own customer base. And it's one more way to you to think about your exit strategy or monetization strategy. After that, we learned this lesson, and we invested in several companies with whom we understand that their exit strategy can want to be purchased by a bigger player. And when Samsung bought LoopPay, they told, we are not care about their sales. We can sell millions of anything across the world without any doubts, if it will be just box, empty box. But they told that we always have to compete with Apple Pay. We understand that we do not have any features, surprising features from ourselves to surprise our customers. But these guys, they have, and they bought this company. Who else, I will answer it later, who else come into the market? As I mentioned before, you can be successful inside you can be Alipay with 450 million clients, with $60 billion valuation, with deep pockets, with $3 billion to purchase other companies only for this year. But if you are not scaling, new players will come to you and eat some pieces of your market. And right now, such players like Xiaomi and Huawei, which also own infrastructure of smartphones, they also come into this market. Indian, as I mentioned, Paytm already belongs to Alipay, but guys like Oxygen, MobiKwik, and others, they are also successful how to attract customers. And they will always compete with you. As I mentioned, how to serve this situation. E-commerce giants like PayPal, Alipay, they can start to buy neobanks. Because as I mentioned, neobank, they do not have so big customer base, but they have extremely well done products. Second one, it is how to add more and more complementary products to your ecosystem. And third one, how to scale to other countries, but until infrastructure lack will not be served here in Asia Pacific region, it will be a very big problem for everybody. So it is right time to ask some questions. Yep.
Right. So in Asian countries, we're small. We may have a great product, right? So you say that you also look at companies that may have an exit strategy of being sold off, right? So do you have like an analysis matrix? So let's say that a company wants to develop a product, a company whose exit strategy is to be sold off. Do you have any advice for that company? How do you actually come up with a business model that is geared, optimized for that?
It's not a magic. I mean, to know what bigger players are waiting for from smaller players, even in small countries, but still everybody wants to be everywhere. I mean, between big guys. You can read open based articles regarding what they're doing today and analyze it. You can read our report, or you can come to us and to ask us or our guys, what do you know about expectations from these guys? Because we are always not only in touch with startups, we're always in touch with Alipay, Rakuten, Goldman Sachs, DST Global, what they're waiting for. Because we believe that most of exits will belong not to IPOs, will belong to M&As. Especially in Asia, whole big guys, they're waiting for pan-Asian players. They do not want to invest in each standalone solution. Why? Because, for example, when Alipay just bought Paytm, Alipay, they do not have very big team inside the conglomerate. And just imagine, there are 10 of you, or for example, 50 of you. And new 50 guys, new guys to you, with other corporate culture, with other technical equipment, will come to you. You have to proceed with your own product, and you have to spend time to originate great relationships with humans, with persons, and to integrate your products technically. After that, imagine if 20 new companies which you can buy will come to you. They will kill you by their amount of questions, etc. And somebody before these potential purchases have to back them in bigger companies. Just check what Chinese Uber-like services are doing for the last 2 years. They started to unite together. Even Uber came to this journey because why we have to compete? Why we have to be so arrogant as before? Maybe when we invested in 1 month in Simple and Moving, 2 direct competitors in the US, everybody asked me why you are why do you want to invest in competitors? Come on, guys. They together compete against traditional banks. They together compete with old school solutions, laziness, bureaucracy. They compete with the past. They do not compete between themselves. And the same with fintechs across Asia. Why do you want to be standalone independent? It's good. I mean, it is, I understand why it is so necessary and important for entrepreneurs. But if you already created, became successful on your own market, and understood that you have to scale, but you found that the by the way, if you found that there are the same companies on other markets which are doing the same products and services as you are expecting to do by yourself, why not to be merged in bigger one company? It will be better in terms of to be top of mind for your customers. It will be better for potential stakeholders and buyers. It will be better for your expenses for R&D. Because, for example, we invested in 5 mobile banks. We invested in 3 NPS players. These 3 NPS players, they invested in the same features every year to create why? Your value not how to create new features. Your value how to attract more customers and serve them better. If you are doing the same stuff, if you are not super sophisticated guys like Steve Jobs to create extremely new on your market, why you are trying to do the same and your competition only belongs to speed? All of you very fast. Maybe to unite together your R&D centers, maybe to unite together your sales force, maybe even to unite maybe to unite together your brands also. It will save a lot of money for marketing. This is my advice, not to be arrogant. Look around you, find the same guys with the same values in terms of corporate culture. Unite together, create bigger one companies, and move faster than before. Not to try to create second wheel, second time. Thanks. Maybe more questions? Cool. Yeah.
Most of these banks are moving very fast in markets with singularity. So you're talking about Europe perspective, €1 denomination, one transaction system. Whereas in America itself, different regulations or different kind of things, different regulations now. So ASEAN itself has even very
yeah, it is a very big problem with that so many countries across Asia-Pacific region, and each country is so unique, not only in terms of regulation, as you mentioned, but also in terms of use cases. Sometimes you have to be more offline than online. Sometimes you have to be integrated with currently existing big players, etc., etc. But this is the value of the region and currently existing local players, how to unite together against US market, against European market. Because if we will stay here as independent and standalone players, these big guys will come to the market, maybe fast, maybe not so fast, and they will compete very hard. If we can unite here our infrastructure to be launched as SaaS platforms, our products, I mean, if you are MPS acquiring company here, you will be, you will decide to unite together with MPS acquiring company from Indonesia, from Myanmar, from South Korea, from Japan. This company will be bigger and better than any other US or European-based potential competitor here. It will be very hard to them to, for them it will be cheaper to buy you with great premium, not to compete with you. But if you will stay standalone and independent, they will always choose to come to the market by themselves, because integration of each player in each country will be a nightmare for them. And it's very easy to them to compete with you. Mid-stage. On early stage, for sure you have to be independent and standalone, because you just set up your company, you have to test your MVP, you have to attract first customers, to make first mistakes, to solve them. After that, when you will be big enough inside your country, I advise for everybody not to try to go, especially without infrastructure, by yourself to other countries, but better to find the same companies in other countries and ask them, maybe we will be better, we will be united together. Yep.
Which currency do you recommend as the transaction if there's any lag when establishing issues?
To be honest, I do not know which currency can be used as basic currency for Asia Pacific region. For sure, if you will ask MS from Singapore, they will tell you Singapore. Other regulator from other country will advise their own currency. Blockchain experts will advise you to go to blockchain-based multi-currency platforms. I think it's not question of theory, I mean pluses and minuses. It's question of practice. Who will move so fast to attract new players to your platform and to use your currency? It can be currency of any country, to be honest. If you will, for example, if you will create this infrastructure to host whole other fintechs, they will use your currency, not because it will be the best solution, because it will be only one solution to use everywhere. It is great moment and great opportunity to expand for each regulator overseas with their own infrastructure and currencies to attract more potential customers and partners to use your tech equipment, your currencies in their own solutions.